Hello friends and traders, Nalinakshi Swami here. Actually, morning I posted a video. Unfortunately, I was not able to record the chart and the data. I was talking about the liquidity, inducement, and also the traps. Where the traps can happen, where is the buy side liquidity and the sell side liquidity, I was talking about that. So, see, liquidity is induced. As a thumb rule, there should be a huge fall in the market like this. There is a fall in the market. There was a fall, gap down, and you can consider it as a 3 candles, 1 or 3 or 4 candles, because it is a gap. After the gap, the liquidity was introduced into the market. Liquidity, this was a huge imbalance. After that, buyers and sellers were engaged into the market. And finally, what happened is there was a break of the structure and market ended here. These are all the things. It is internal liquidity. Internal liquidity. And on 13th on Friday, market gapped up to this previous day high, equal high. Previous day equal high. So it induced the sellers. This liquidity gap up to this level, equal high, it induced the sellers. When it induced the sellers, see, what is the logic behind it is the gapped up, breaking all this, all this structure. These are all the stop loss hunting, because they have introduced liquidity into the market. You can see it is not a straight away fall after this fall. You can see buyers, one buyer, one seller, one buyer, one seller, and again gap down, three candles down, again 2 candles up, 1 candle red candle and another green candle. Like that, buyers and sellers were engaged. So in meanwhile, you can see, I'll zoom it out. In this process, actually, double top has been created. Double top has been created. Double top or equal high has been created. Naturally, whoever gone short, their stop loss will be there. I will keep the stop loss over here. Many people, many traders will keep the stop loss. This is a stop loss area. And this is also a stop loss area. Stop loss area, right? What the market do? What the big institution they did? They grabbed all this liquidity. This is internal liquidity, gapped up to this level, and all the traders, all the gurus, technical mentors or technical analysts, they have learned that double top are the resistance level. And also immediately you can see a liquidity has been induced by way of selling. So it has been selling has been induced at this level, equal high, double top, it has been induced. So what the sellers will do? The sellers will keep again their stop losses. All the stop losses are again, there is a stop loss here and there is stop loss. So money is flowing in this area, stop loss. And price came down, the sellers entered into the market, price came down and it hit the level of the balanced area. You can also make the balanced area by taking the fixed, anchored VWAP. So you can see this is the VWAP, anchored VWAP, exactly volume weighted average is coming at this level, right? This is the level, the price came and halted, and you can see the reversal of this. Reversal of this, and price started coming into same level, triple top now. It is a triple top and equal high, and it induced break of the structure. It induced the break of the structure. The price went beyond this, and who will become active? The breakout traders will become active. So those breakout traders, by seeing this candle, they will keep their stop losses here, beneath this here. See here. If you carefully see, the price came down and it hunted the liquidity over here, and it grabbed the liquidity and it started moving up. And when you should know where are the levels. This, though it is a gap down, there are buyers and sellers have been engaged over here. So you need to mark these levels. This is the external liquidity, and the price has been pushed. All the breakout traders jumped in. See the candle, how it is. See the big candle, they jumped over it. They placed the stop losses. All the stop losses are here. Again, the stop losses are here, and the price has been plummeted. And it tried to, it came down, and it took all the buyers, and again the price has pushed to this level. You can see the price actually in the live market, this will be like this, big green candle pushing to this. So this is how trapping is. So when they grab this, all this liquidity, stop loss hunting, the price plummeted. This is external liquidity. This was the internal liquidity. They grabbed all the external liquidity. The price has come down. Now it has ended at the equal low. Again, liquidity will be induced into the market. Price may, after this fall, huge fall, is an imbalance. There will be inducement. How it will be? It has induced already. Before closing, you can see a green candle, 15-minute green candle going up to 15,803 from 743. 60 points inducement has happened. So this is nothing but equal low. When there is an equal low, and my range is this is the range high. For me, the reference is the range high, and it is an equal low. Probably, if it comes and if it grabs the liquidity as a professional trader, then only you should enter. You should not enter into this gap up. This will be inducement. So it will, if it gaps up to this level or to this level, okay, or to this level, again, sellers will be induced into. It will start coming down, and you will get sellers, all the retailers will go down. Try to sell. Whoever has been short, they will go short, and it will come back. It may come back, and grab the liquidity and make. This liquidity hunt it is taking place in all the time frame because it is fractal. Even if you go to the lower time frame like 5 minutes, 3 minutes, 1 minute, you can see the liquidity graphs. So where are the levels where the liquidity hunt will take place is near the double bottoms, previous day highs, previous day lows, double top, triple top, all those areas liquidity hunt will be taken. See, once all the stop loss have been hunted, it has gapped up. Gapped up to the where it gapped up to the level, gapped up to the level of previous day high. So when the big institution have grabbed the stop loss hunting, they need to buy shares in the double the quantity. They have to put double the quantity of money to go through this level. So if they buy all the stop losses and they have gone, they will be at loss. So what they will do, they will again induce liquidity. They will come back, they trap all these people, and then they have trapped, and then they will try to push the level, and they mitigated it. They went past their break of the structure, and they are at profit. Now they plummeted the price. This is how on and on in the market liquidity hunt takes place. So few people, I was seeing many YouTubers. I usually watch many YouTubers, day traders who start how I made 40,000, how I made 1 lakh, how I made. Not even a single YouTuber who are making money, who are showing that I am making money, they are not able to grab this and grab the professional way of what the bank institutions are trying to do. Actually, I was watching a video. I don't want to name the person. Actually, he was explaining he is buying 3,000 quantity of the call option, Nifty call option, and he was explaining it is the break of structure, and he was buying 16,000 call option around 183 rupees. No, not 183, 283 rupees or 285. So, and his target will be this much only. And he is not transparent why he is booking the profits, and he was showing it to the traders. He made 1,40,000, 1,20,000. The quantity is huge. Suppose if you buy only one lot for 30 points, that will be 1,500 rupees. 1,500 rupees for this. So when you buy 3,000 quantity, and it is nothing but luring the retailers and small investors to their channels, and also they don't teach, and also they don't trade. And he could have grabbed this area when Nifty came and hit this level. He could have entered in this place. Instead of that, he was a breakout trader. Nothing but he was a breakout trader, and he started telling the price started going up, breakout trader. So for the breakout trader, the trap will happen. Actually, if you jump immediately, this is a trap. You will be thrown out. Weak traders will be thrown out of the market if you enter into the market. Suppose if you would have entered here, if you would have kept stop loss here, you can sustain. And this is how the market play will be. You should know how liquidity will be induced into the market. See, here, this is an imbalance, huge fall. Can you do that? No. If you are able to gauge where this big institution, what are their intentions, how they play, then you can be with them and you can make huge money. You can make huge this move. Do you think this move is good? Do you think this move is good? No. This move is a huge one. But are they giving any chance? See how they are stopping. By the end of the day, they will push the market to this high level. They trap all the buyers. They trap all the buyers. And whoever gone long, thinking that by seeing the break of the structure, see, break of this structure, they are all plummeted and they gap down and they introduced. After the gap down, they distributed among the retailers. Buy and sell, sellers are engaged, and these buy and sellers, what they will do, sellers will keep their stop losses above and buyers will keep their stop losses below, and all the liquidity will be grabbed and the price will move. This is the play on and on. It is taking place in the Indian market. That's what I'm seeing in the Indian market. There is no chance for the retailers to trade. But if you can gauge the movement of the big institution, you can be with these people and you can trade. But on Monday, don't go long immediately when it gaps up to this level. Suppose if it gaps up to the level of 15,897 or 914, definitely after hitting that level, it will show as if it is a rejection from that level and price will start moving down. So it will induce the sellers, and the stop loss hunting will take place when it comes back and when it starts moving up. So wait for the institution level, institution liquidity level. Let's see the track. First, they will definitely, they will leave the footprints and there will be watermarks on the chart. They cannot hide themselves. So if you carefully observe, you can see their footprints. Bank, big institution, big players, footprints. If you grab, if you go along with them, then only you can make money. See, what happens in retail traders, they become impatient immediately after. They do not know the market structure and they will not be knowing anything. Many of the traders, they work on the calls. Somebody will give you by call option, by put option, so many Telegram channels, they will say it is going to go up. They will get trapped. So if you educate yourself and if you come to know how the market play is there, not only the market structure, how the market is played by the institution players, big institutions, then only if you start going along with them, you can make money. So do not trade in between levels, traders. If you stop trading in between levels, you will have discipline and you can make money. Always patience pays. Patience pays. And I hope this, where the liquidity hunt will take place, what is the liquidity, how it is induced. Probably in this, I have tried my level best to explain it to you. I hope you will trade wisely and your trade will improve. That is my wish actually. So if these are the levels, equilibrium level for tomorrow's trade, on Monday trade, this flip level is very important. And if you have applied the anchored VWAP, this is volume weighted average, is coming to 15,912. Sometimes it will push through this level to the level of 15,940, then it may turn around. Then it may induce sellers, and definitely here double top can be created and their stop losses will be there. And when price comes back and returns, stop loss hunting will take place and price may go up to this level also. 16,800 and even it can travel past this level. And because they have hunted the stop loss over here. When they have hunted the stop loss, they will hunt the stop loss below and they will try to traverse beyond this level, because this is an order block. Here it's an order block. This is the area all the buyers have been trapped. So they will go and mitigate this level, then they will become profitable. Their intention will be over. There you have to look for the final level. Suppose if the Nifty comes to 16,184, then only you have to go for short selling, not here, not here, not at this in between areas. You will get trapped. So I hope you can understand where the traps can happen. This is the way market functions. Big players function in this way and grab the liquidity and trap the retailers and also off knowledge people and technical traders who have learned double top, double bottom as a support, double top as a resistance. These are the areas they will lead confusion and they can play between this. So I hope this will help you to understand how the play will be there in the market. Okay, friends, thank you very much. Nadinakshi Swami signing off.